On today's episode, we are going to take a look at two betting stocks. First, we're going to start off by taking a look at recent news. Then what we're going to do is put them against each other and see which one I would prefer to invest in. And finally, we're also going to take a look at some price targets for both these companies. The two betting stocks we're going to take a look at today are going to be DraftKings and PENN National. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream taking a look at stocks you want me to look at. So let's get started. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done some crazy returns. If growing your money is something you'd like to do more of this year, you can visit thefool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now back to today's episode. Alright, so let's start off with some recent news. Right now we're going to take a look at DraftKings, traded under the NASDAQ as ticker DKNG. Right now, it is sitting at $67.75. It was down about 5.5% for the day, and it's because of some recent news we're going to take a look at. But we can see year to date, this stock has done amazing, about 51%, and it is down about the 5.5% from its all-time highs. It has a market cap of about $26.9 billion. Right now, the main reason the stock price has dropped is DraftKings announces a proposed offering of about $1 billion of convertible senior notes. Some investors don't like this because it means that shares are going to be diluted. So right now, I definitely could say that DraftKings has a very strong balance sheet. The main reason I would guess for them to take out this $1 billion of convertible senior notes to grab some debt is that they're planning on doing some form of acquisitions in the future, and they're trying to build up that cash. The second stock we're going to take a look at today is PENN National Gaming. This is traded under the NASDAQ as well as ticker PENN. Right now, in the past year, the stock has done amazing to investors, given already 68.7%. It has a market cap of about $21.36 billion. I'm actually surprised this market cap is actually smaller than DraftKings. I thought PENN was actually a bit higher. Right now, the stock price did jump up today about 4.6%. And the main reason the stock price is up, on Friday, S&P Dow Jones Indexes announced that it will add PENN National Gaming in the S&P 500 benchmark index on March 22nd. So a lot of people enjoy this when a company goes into the S&P 500 because there are funds that follow the S&P 500. So the moment they enter, you're going to start seeing funds buying into this company and overall increasing, in theory, increasing that stock price. All right, now that we took a look at their recent news, now let's try to put them against each other and see which one I would prefer to invest in. So the first thing we're going to take a look at is future growth. So analysts believe that DraftKings is going to grow its revenue 27.7% on average for the next 3 to 5 years. So this is a very strong growth company for sure. If we take a look at PENN is expected to grow 13.6% within that same time frame. So the first point obviously is going to go to DraftKings on the future growth. Next, let's take a look at historical revenue growth. So if we take a look at DraftKings in the past 3 years, it has grown pretty strong. In 2020, it grew its revenue 90%, in 2019, 42%, and in 2018, 242%. So historically, this has been a very high growth company. PENN, unfortunately, did take a bit of a hit in the most recent year because of COVID, right? There is a major difference between DraftKings and PENN. PENN has a nice amount of casinos. They own Barstool, which is a competitor of DraftKings in that online betting. But they also have a nice amount of casinos, and that's the main reason this stock has taken a huge dip in form of revenue, right? There was a lot of closures. But in 2020, the revenue was down about 32%. In 2019, this company was growing. It had a 47% revenue growth. And in 2018, 2018 it had 13.97. So if it wasn't for COVID, I do believe this company would have seen strong growth this year as well. So right now, DraftKings has grown its revenue a lot faster than PENN in historically, so I'm gonna have to give this second point to DraftKings. Next, I want to take a look at margins, and let's start off with gross and profit margins right now. So if we take a look at trailing 12 months for DraftKings, gross margins are about 43.6%. If we take a look at their profit margins, they're negative 137%. So we can see DraftKings right now is not GAAP profitable and nowhere near that. If we take a look at PENN, I want to say it's probably going to tell us a different story. So if we take a look at the trailing 12 months, gross margins for PENN are actually 47.8%. I did not think they were gonna be that high. So gross margins for PENN are a lot higher. PENN has also had more long-term profitability. If it wasn't for these past for COVID, I do believe PENN would have been profitable this year as well. So here I do believe PENN has better margins than DraftKings. So we're gonna have to give that point to PENN on this one. Next, I want to take a look at cash flow margins, mainly the operating cash flow margins. This tells me how much the company is making from its everyday activities. Let's start off with DraftKings. So DraftKings, unfortunately, has had this negative slope on its operating cash flow margins. In the most recent trailing 12 months, it had operating cash flow margins of about negative 55%, something I'm not liking at all. If we take a look, PENN has stronger operating cash flow margins. It has been positive, and even though it did get affected during COVID situation, their operating cash flow margins are still almost 10% when taking a look at the trailing 12 months. So here we can give another point to PENN, and again, this is what we normally see in this type of videos. We can see DraftKings is growing at faster levels. PENN is still growing at strong levels, right? It's not like it's a slow grower, but we can see PENN, since it is a slower grower, it kind of has already created its business, and it has stronger margins at the moment. So right now, just from these 2 points, we can see these 4 points, we can see they're in different sectors. And I want to say different investors would choose one over the other. Maybe the one that's more focused on heavy grower might choose DraftKings right now, and maybe one focused on some type of growth, but also better margins would choose PENN. So now let's take a look at their balance sheet. DraftKings has pretty much no debt. Obviously, with the new news that we saw of them kind of taking that offering, there's going to be an increase of debt, but that cash is also going to be here. So regardless, DraftKings has a very strong balance sheet. If we take a look at PENN actually also has a strong balance sheet. Remember, they are profitable and they do have positive cash flow from operations. So because of those metrics, I am less hard on PENN, right, compared to DraftKings. DraftKings, I'm happy they have no debt. When it comes to PENN, since they have stronger margins, it allows me to allow them to have kind of form of leverage, and they are a little bit leveraged right now when we take a look at cash and short-term investments compared to debt. But I want to say both of them have a strong balance sheet. So here I'm actually going to give a point to both of them. Next, I want to take a look at price to sales valuations for both these companies. First, let's start off with historical price to sales ratio. So right now we can see DraftKings has a very, very high price to sales ratio of about 34.7. This high price to sales ratio is probably due to the fact that since DraftKings has no real kind of casinos, they don't have, I want to say, hardware or real assets. They're more like running in the back end of the softwares. In the long term of things, DraftKings can have higher profit margins. They can have higher gross margins because they're not paying for those type of expenses like PENN has with its casinos. But at the moment, we can see that margins are obviously a lot better for PENN. PENN has a very cheap price to ratio when compared to DraftKings of about 5.2. If we take a look at forward price to sales ratio, the story changes a bit, right? It's still the same story. PENN has a lot cheaper price to sales valuation. And again, this kind of surprises me because, like I mentioned, DraftKings is nowhere near profitable and both of them are growing at some decent levels. DraftKings has a price to sales ratio of 18.9 when looking at next year's revenue. PENN has a price to sales ratio of about 3.8. So right now for price to sales valuation, I'm obviously going to give it to PENN. I'm pretty shocked at how cheap it is even though I understand, right, I 100% understand that DraftKings is growing a little bit faster, and in the long term of things, DraftKings can kind of hit higher margins. I'm shocked that that is such a huge difference between the two. So now let's take a look at which one analysts are more bullish on. So DraftKings, the total analyst price target is about $72. It's about an upside of about 7%. If we take a look at PENN, the price target is about 119, and that has a downside of about 13%. So right now we can see analysts are a little more bullish on DraftKings than they are on PENN. So we're going to have to give that point to DraftKings right now. All right, so now the final one is which one am I more bullish on? And I do believe this is probably where most of us are going to differ. So here, whichever one you decide will probably be the winner, but it seems they're both great stocks, and they're all both for different style of investors. So for me, I want to say I'm probably more bullish on DraftKings, and I'm going to explain why in a bit. So right now, we're going to have to give 5 points to DraftKings and 4 points to PENN. Again, the only deciding factor, the main deciding factor was my final choice. So it could be different for everyone. Now, let me talk about my thoughts. Why am I a little bit more bullish on DraftKings? Right now, I'm a little more bullish on DraftKings because even though PENN has those assets of those casinos, in the long term of things, I believe things are going to be more moving into like the digital world. So those kind of casinos are going to become some form of liabilities in some time. And again, everybody can have a different mindset about this. So even though PENN just recently bought Barstool, and Barstool has an insane amount of users, PENN can definitely come take over. The one thing I'm liking about DraftKings right now is that they are, I think, the only ones that are hitting the esports between these two. I know PENN has had talks about them kind of joining the esports betting community, but at the moment, I don't believe they are. So DraftKings is going to be the one I'm a little more bullish on. But the more I think about it, PENN doesn't seem like a bad one to have in my investment, in my portfolio. Let me say, if I was forced to have both of them in my portfolio, I would gladly, right? I wouldn't cry, for example, if PENN was in my portfolio. I don't think it's a bad investment. And again, this is not advice, but right now I'm just a little bit more bullish on DraftKings. And let me know in the comments, guys, which one are you more bullish on? So take care, guys. Have a good night and see you next time. All right, so I know I mentioned about my free NFT giveaways. So right now I have created the first one, and I call it the Epic Chips. Obviously is more of a parody to AMD, and I thought this was the perfect one because AMD was actually my first stock. So for you guys to get this for free, I'm gonna be giving away 4 every week. I made 50 of these. I'm not gonna make any more, and I'm not gonna sell any of them either. These are just going to be giveaways to supporters of my channel. I also have a second one coming out that is going to be a Tesla parody, which I think is pretty funny. So for you to win, it's going to be very simple. You can either just post on the comments below and tell me you want an AMD Epic chip. I'll write down your username and then I'll do a random generator. The other way is you can follow me on Twitch, and you can just go whenever I stream next time. You can just say, hey, I'm here for an NFT. I will again put your name on there. Or finally, you can just go on Twitter, follow me, and just retweet my most recent tweet. And you can just tell me, hey, I want an Epic Chips NFT right now. So again, these are all free. I'm not going to be charging anyone anything for them. So I hope you guys enjoy them.